Welcome back, YouTube. What is happening today? We're going to be going over our poll that we did, going over what do you want to see for our 1,000 subscriber episode or YouTube video for you guys in celebration. We're going to be going over portfolio diversification, what I believe for myself to be the most profitable risk on portfolio diversification, right? So just a top balcony view on it is the 30% crypto, 25% blue chip, 25% small cap, 10% rare earths, and 10% cash. And we're going to be going into these two a little bit later, but this can really help anchor your portfolio. As you can see, silver at an all-time high, blasting off right now, and gold at an all-time high as well. So things like that, right? Let's jump into it. Let's have some fun. Our first thing to talk about, cryptocurrency, what is becoming quickly not the currency of the future, right? But capturing the volatility of the future, as I like to call it, right? Bitcoin, one of the most popular assets in the entire world, has been growing at a 30% gain per year. If you tabulate all of the downs and ups, right? After all of the trading, it tabulates about 30% a year. Now that not only beats the S&P 500, but you're challenged to find a better asset out there. And so that's why I've staked the majority of the cryptocurrency portfolio in BTC, guys. It's hard to beat digital currency like Bitcoin. One of the most desirable assets out there. So I don't have the percentages in which I've staked my 30%, but I'll let you guys do your own diversification of that, right? Not here to tell you what to do. The next utility coins I wanted to go into, XRP and ADA, right? These typically run together, but I think, having one or the other will help you capture any significant policy change that the U.S. government is going through, which in fact is quite often, right? We have the clarification bill going, I think it's the Clarity Act, going through the Senate, and people talking every single day about how cryptocurrency is going to affect the future. What coins is it going to be? So it doesn't just have to be these two, right? But these are my top two coins in our utility coins, as they're phrased. The next two are meme coins, right? You want your meme coin, your volatility exposure on your dog coins, right? Doge and Bonk. Bonk I particularly freaking love, but that's because it's been so true to any of the charts that we've made, and it's ran so aggressively. Now, there are so many different and positive cryptocurrencies that you could put in here, right? I mean, you have XLM. You have, what else? I don't really like SHIB. I mean, you have ETH, of course. This is like IWM to crypto. Erase that. ETH. Come on. You have ETH, and it goes on and on and on, right? Ethereum is always going to be the correlation between IWM, and then Bitcoin is kind of like your S&P, right? You have your blue chip and your small cap stock index. The next 25% I wanted to talk about was your blue chip stocks. Now, this is where the majority of your slower gains are going to come from, but this is all about a snowball effect, right? You want to get into good companies, profitable companies that are going to be sticking around for the long run. And the ones that come to mind for me are Apple, right? Apple completely diversified. In every single person's pocket, you can find an Apple phone. And they continuously do these share buybacks that positively affect the stock. Now, if we look at Apple stock, you can see over the long run, over the long haul, you are a winner, right? That's just case in point. And you have these dips that you can get in from the 200-day EMA, and that would be my accumulation strategy, right? You had one in 2019, you had one in 2025. It doesn't happen often, but often when it does, you see crazy gains, right? And so that would be my investing strategy off a lot of these blue chip stocks. I'd wait for a peel back and then enter, but that is just me. I can't tell you guys what to do, right? The next stock I want to get into was Amazon. Yes, Amazon. The AI adaptation is most likely going to really, really positively affect their bottom line. And you should see this stock grow immensely. Unfortunately, I think they're an absolutely scummy company, taking advantage of a lot of smaller caps, a lot of workers, but there's no denying that they are going to be around for the long term, especially with their adoption of AI. I expect them to only grow significantly, right? You look at Amazon, and although you might not get those pullbacks of the 200-day EMA, you can enter off the 50 and you'll be just fine with that same accumulation strategy, right? Off the 50, off the 50, off the 50. Pretty close. I would say every time you see this significant sell-off close to the 50, because you don't touch it there, you don't touch it there, but there are signs, right? And we're on the monthly time frame. Maybe the weekly will help a little bit. Every time we tap the weekly 50, just trigger the buy, right? So yeah, that's Amazon. And then I had Tesla in there. It's going to be hard, and I specifically have Tesla and Dogen in portfolio because it's hard to bet against the richest man on earth. Elon Musk, in my opinion, is slated to continue to win. That's just the outlook I have. I do believe in Tesla as a long-term company, and regardless of the valuation, I like the stock. So Tesla is in there. I have ELF in there as a diversification on blue chip stocks. I do think that ELF long term, and in case you guys don't know what ELF is, it's a beauty company. ELF Beauty goes over makeup, and although way more volatile than the previous stocks I mentioned, I believe ELF is going to take market share from companies like Ulta and a lot of your brick and mortar companies. ELF is more of an e-commerce beast, right? So when you look at the future, they have less brick and mortar establishments, which actually nowadays, with visitation being so low, like shopping, right, retail, you're seeing e-commerce absolutely dominate. So I expect ELF to continue to outperform Ulta. And if you're going to bet on one thing, I'm betting on the fact that women will always wear makeup, right? That's my bet right now. So I like ELF in the long term. And you could take that same mentality of I'm going to buy every time it hits the 50, or I'm going to buy every time it hits the 200, right? And I think you'll do fine. I think you'll just do just well and dandy. The next stock I want to talk about was the one, the only SPXL, right? And what this is basically is, think of your S&P 500, the SPY, right? The longest term winning stock index. This thing, hard to beat. Unless you're investing in Bitcoin, this thing is really, really hard to beat. So what I'm watching for here is just to buy and hold, right? I mean, since 2011, you're up 686%. Now 3x that, right? That's what SPXL is. SPXL. It's just a 3x leverage long on the S&P 500. So we'll take that same measurement, right, from 2011 on this dip. You saw a 5,887% gain, guys. So I'm bullish on SPXL. You are betting on the future of the American economy, especially with all the stimulus coming. I think this thing has nothing but green grass ahead. And I would take that same mentality with investing. Every time you touch the weekly or the monthly 50-day EMA, I'm a buyer, right? And it depends on your long-term leverage risk, right? Do you want to get in on the monthly or the weekly? But regardless, I am a buyer of this index passively, right? Just continue to throw in reoccurring investment and watch it grow. And I do think that over the long term, 5 years, 10 years, you're going to see significant gains. This is one of those where you set it and you forget it. And that inevitably, right, is what's going to help you accumulate wealth. Because if you look at what percentage of swing traders lose in the stock market. And I say this because the easiest way to accumulate wealth is through these successful index funds, right? SPY, SPXL. And I say that because people underestimate just how much their emotions play into swing trading or day trading, right? And it says 90%, this says 90%, 96%, 95%, 70 to 90%. So the vast majority of traders underperform the stock market. And you could imagine, right? They're underperforming SPY. That is what everyone's 401ks are levered into. Now imagine if you have that 3x leverage, right, on the most bullish American companies, you're going to outperform the average trader greatly by just holding SPXL, Bitcoin, and IWM. It's just the reality here. So this is what I preach. I preach safe investments, but I also want that leverage, right? I want to outperform the market. It's the dog in me, right? It's the dog in me. So that's SPXL as you were weighted greater in the blue chip stocks. Small cap stocks are bread and butter, or the risk on assets, right? You want to capture the volatility the same way that I have my mentality with Bitcoin. I have my mentality with IWM, GME, AI, AMC, Webull, and NEO, right? Our favorite small cap stocks. And I've been covering small cap stocks so much because I'm passionate about the communities in the small cap stocks. And I do believe that we are on the cusp of seeing IWM absolutely rip and tear because of the monetary policy changes, because of the inflation risks, right? I mean, you have the government buying treasury bills right now. You have the money printer being booted back up, right? You've got to pump it up. You've got to pump up that money printer at the Fed. You have rates coming down. So you have all of this liquidity coming into the markets that oftentimes pumps the heck out of IWM, right? IWM goes crazy. That trickles into Gamestop. That trickles into AI. That trickles into AMC. That trickles into Webull. And eventually that trickles into NEO, right? So that is my mentality on risk on assets. I think we're going to do very, very exceptionally well if we see IWM continue to pump to the freaking moon, guys. As it is, made another all-time high today. Regardless of what the S&P 500 is doing, this thing is absolutely ballistic. And I do anticipate you will see a recovery into the end of the day, hopefully getting a bullish hammer. We'll see, though, right? Because SPY is down 1%. The entire market is dumping. Bitcoin is dumping, but I anticipate this sell-off to be short-lived. So that's our small cap stocks. Really, I would say the broader the broader message of what I'm saying is this is a very risk-on portfolio, right? That's the broader message is this is a very risk-on portfolio, and that is because I am willing to take the risk, right? If you can stomach the volatility, guys, you can earn the gains. That's inevitably what this is, right? And the charts that we do, although yes, you're never going to time the top exactly. You're never going to time the bottom exactly. But what we do is we average down into our favored stocks and crypto at the right time. And then if you can stomach the volatility of these risk on assets, you can enhance your gains. And that's my mentality. And it's always been. So Rare earths. Rare earths is just getting into our deflationary assets, right? We really want to hold a hedge on inflation, especially nowadays, right? You have the entire economy running a little hotter than usual, or at least it's going to be, right? With what Trump wants, devalue of the dollar and print, print, print. He wants to stimulate the economy, right? So holding gold, silver, mining companies like MP that the government just did a deal with that shot it up like crazy is going to be pretty crucial for the long-term success of your hedge. And although I just got rid of gold there, you can see just how insane these assets have been doing recently. And I know we covered in the beginning of the video, but we're going to pull up gold as an example. Now, not gold.com. Give me gold. Gold is on a legendary tear, like a historic run, and you could say almost a squeeze, right? A supply squeeze in which your demand is outperforming your supply. And what this becomes is this endless leg up. Now, I'm not advocating to buy at these levels, but if you could accumulate during this 5-year period, well, then you have these run-ups during these high inflationary periods, right? Silver is another great example of that. Silver is having a supply squeeze right now. There is less silver than the supply is demanding, and you're seeing all-time highs in not just the price, but the RSI on silver, which is insane. That is insane. Silver's at its most overbought period in history. So that's another part of our risk-on portfolio. Is gold, silver, mining companies. Now, you could diversify this if you wanted to, right? If you wanted to get into past the mining companies, you could get into smaller earth minerals like copper, platinum. One that Michael Burry actually favors is water, right? That's a huge earth, not earth mineral, but earth assets that is scarce, right? Water, which sounds crazy, but that is one of his, or was one of his largest holdings past 2008. So you could add that in there. Now, it is what it is. You're holding a stock on water, right? It's nothing crazy, but that could diversify a potential crisis, right? The last and one of the most important parts of our diversification for a risk-on portfolio is 10% cash. And that is because you never know. You simply never know when you're going to see these pullbacks. Honestly, you really don't. And there's signs, right? Your weekly MACD crossed at the top here. You then dumped. So if you know how to trade, if you're listening, right, you can pick up on these sell-offs. And if you hold 10% cash, guys, you're holding buying powder, right? You are putting aside 10% of your portfolio saying, I'm going to wait patiently for these opportunities to arise. And then when I see your tap of a historic trend line, like Bitcoin's going through right now, right? 2022 bottom, tap, and your third tap here, I'm going to buy because everyone's fearful right here. I'm going to buy, right? And that is the mentality of being greedy when other people are fearful and being fearful when other people are greedy. The famous quote by Warren Buffett. And I took this a step further. Putting in STRC. Now, STRC is a new stock ticker made by Michael Saylor, STRC. And what it is it's digital capital, right? Or digital credit. STRC is, think of it as a high yield bank account, right? You're earning 10% monthly dividends, and that's 10% every month. So you would get 100% a year pretty much on your investment, or 10% a year on your investment, excuse me. not 100%. That would be crazy. Every single month. So these come out as cash to your portfolio, and they are tax deferred. So what that means is these dividends can be reinvested into other underlying assets without being taxed. Now that's huge when you're talking about having dry powder on the sidelines for when these dips occur. Now, they are only taxed once you sell the underlying asset. That is the most important part, right? That these tax-deferred dividends are a stable and monthly dividend that come off of a pretty illiquid stock, right? STRC is supposed to be the volatility stripped so that you could have the yield or the 10% dividend as a stable, low volatility bank account, right? That is the thesis on STRC. And so far, right, I mean, we're 4 months in, you've seen that play out pretty dramatically. And the fact that if you invested off the IPO, you'd be up 16% while earning 10% monthly dividends, that's actually outperformed Bitcoin. So during these periods of sell-off, right, I would take the digital credit. I'm taking the yield over the Bitcoin that's depreciated, what is it, 30% now? So that I can buy the dip. And that's my thesis on holding cash. You could just hold it in your bank account. You could hold it in a higher yield bank account. But I like STRC as a hedge on these volatile swings down, right? 36% is crazy on Bitcoin. That's absolutely nuts value right now. So I guess that's it, guys. And to finish off the video, I just want to say thank you guys genuinely from the bottom of my heart. None of this is possible without the people who have donated, the people who have commented, the people who have shared our channel, and we don't plan on going anywhere. We're going to be here every single day covering stocks, crypto, NEO, AMC, Gamestop, right? And the developments within the market of our favorite stocks. So make sure to slap the subscribe button, guys. God bless each and every single one of you guys. And remember, the best is yet to come, guys. Thank you and peace.